Hi, my name is Scott Gibson with Beneath the Surface. I'm here with Eric Coffin of Hard Rock Analyst Newsletter. Eric, thanks for being with us.
Thanks, Scott. Thanks for having me.
Wanted to get your take on 2012 going into 2013. Gold, the economy. Start off where you'd like.
I think most economies, I think the U.S. and Europe will both probably surprise. I think the U.S. will surprise on the upside. Surprise is maybe too strong a word for Europe. I think it'll do a little better, but then I don't expect it to do very well. So a little better means it's going to get past zero. China, I think, will probably exceed its target as it usually does, but I don't think it's going to exceed it's not going to be like the good old days. I think it's going to be like 12% growth. It'll be like 8 instead of 7.5, which is the target. The U.S. in particular, the stronger that is, the more likely it is, I think, that gold's going to be a little bit maybe range-bound, because obviously the stronger the U.S. is, the stronger the greenback's going to be, and that's not the only determinant of the gold price, but it's certainly a big one when it comes to trading.
Exactly. And then what's your take going forward in terms of the stocks?
Again, I mean, it's been a pretty brutal year. I mean, we're really going into 2 years, really, for juniors. We're coming on to a 2-year anniversary of a down cycle. A lot of guys need to raise money. A lot of those guys won't be able to raise money. I think there will be room for some decent performances this year, but it's going to be selective ones. I think you start with guys that have either resources in the ground or that small subset of management groups that can raise money in tough markets, and even better, companies that have a bunch of money and targets. Because I think, I get the sense there's an appetite out there. If somebody delivered a couple of good discoveries, I think you'd see them trade fairly well. And I'm pretty encouraged by the amount of M&A activity suddenly. The last 2 months, it's actually very substantial. You start adding all of these things up, you're probably up around $4 billion now in M&A in the last 2 months, and that's a lot for this sector. That money, some of it will get recycled. It doesn't happen right away. I mean, a takeover takes, depending on how it's done, best case scenario, 3 months, usually 4 or 5, by the time everybody has the meetings and the transaction's really done. But that's going to recycle, some amount of that money. And when you think of how tough it's been for companies to raise money, even if, say, 5 or 10% of that money coming from people that made money in these transactions goes, what the heck, I'll throw some back into the pool. You think about how tough it's been for guys to raise money. Having an extra couple $100 million come back into the sector is going to make a difference.
Yeah, it's going to make a big difference. And what about the companies at the other end of the spectrum, with the majority of them where they don't have much money and they're not going to be able to raise money? What happens there? Does that create an opportunity?
I think it's going to create, I think there'll be 2 types of opportunities. One will be getting a bigger tax write-off because they're going to go to nothing. There'll be God knows how many, 4, 5, 6, 800 are in big trouble. I think if you got a strong management group that really knows how to value projects, I think there's an opportunity for those guys, because you've got companies right now that literally have $100,000 market caps. That's less than the listing fees would be to try to get a prospectus through. There's a few of those around, and I think if you've got a group strong enough to say, okay, their project base, they got no money, but their project base is worth more than that, let's roll a few of these up. And, nobody should have any illusions. That's not going to get done on terms that are going to be joyous for the shareholders of those companies. I mean, if you own a company that's trading half a cent, you're going to take whatever the heck you can get, let's face it. But so I think there is opportunity there for roll-up. But there's also opportunity for, if companies don't want to go to that extent, there's room for smaller companies that have got strong management and strong marketing groups to go out and pick up good assets cheap, be they buying projects or optioning projects. Because there's, you look around a conference like this year, and suddenly 3/4 of the companies are joint venture model. And what that means in the oil country is we don't have any money.
Yeah, that's what they're forced into.
Yeah.
What about those companies, you mentioned half a cent, what about those companies that are doing financings that the TSX Venture allowed below 5 cents?
I'm quite cynical on this whole thing. I mean, I mentioned this in when I spoke at this show, and I said, a lot of people ask me, like, why are they even doing that? Like, why is the exchange doing that? Well, the exchange is now a public company. The exchange also has to report quarterly like everyone else. They don't really want to be losing the revenue, and my cynical side tells me, basically, when things get this bad, they allow these guys to do these half-cent, 1 cent, 1.5 cent financings. It's usually insiders. It's ridiculous dilution, but it keeps the company alive, keeps the listing fees going into the exchange. And if you're someone that owns one of those companies and you see management do, 20 million shares at a cent or a cent and a half, one word, rollback. It's coming, and it's coming soon. Because it's the only reason that makes any sense to do is if you're basically trying to dilute the heck out of it, and then you're going to roll it back. And again, you've got a tight company where you've got a much bigger share position. Not pleasant, but there it is.
A little cynical, but yeah, and that sort of points to a lot of people hoping that a number of these companies just go bankrupt, go out of business, disappear. But that will perpetuate it and prevent companies from just disappearing. They can just roll back and become a shell, essentially.
I mean, you don't want to see people in the business losing their jobs and all that kind of stuff. But the truth of the matter is, it would be nice. You take these 500, 600, 800 companies, pick your number. You look at what they consume in a given year, just in terms of overhead and listings fees and all kind of stuff. I mean, basically, there's probably a couple $100 million anyway that goes into those companies every year that's really creating no value whatsoever. It's basically just keeping them on life support. I would much rather see that money get directed at stronger companies with strong management and good projects, where if you're taking a punt, you've actually got a shot at something. It's not life support.
And where do you see things going forward here at the beginning of 2013 and for the rest of the year? Is there a particular sector or type of company people should be looking at? Should we be running out right now and buying, or watching and waiting? What's your take?
To me, negativity is so universal right now that I'm actually feeling more comfortable, because everybody's just got such a hate on for this stuff. Like everybody thinks the world's coming to an end, and that's pretty much always what bottoms look like. But because of that drag you get with all these companies that have to raise money that are broke, I'm not expecting this like gigantic steep bounce. It's going to take time for this to build any momentum at all. So I think you've got time to look at companies, and I guess the ones I've added in the last while, they fall into sort of a couple of different categories, I guess. Ones that either have or will have a resource fairly soon that to me look undervalued. So that if the economy does surprise on the upside, and this is especially true with kind of bulk materials, iron ore, stuff like that is very economically sensitive. That's one end of the spectrum, and the other end of the spectrum is groups with a strong management group and a really, really healthy bank account, because those are the guys that can be the predators in a market like this and look around and wait and basically pick things up, option properties, and I've been mainly sticking to companies that where the plans they lay out to me leaves a lot of money on the table still. So even if the next two phases don't work out, or the next two drill programs don't work out, they've still got lots of money. In fact, the two of them I'm thinking are both trading for less than the bank accounts, and they will be even after those budgets unless they hit something. But at least there's a plan B there all the time.
Well, trading less than cash is a great place to be, and strong management with cash, they can do a takeover.
There's things they can do.
What are some of the companies that fall into these categories that you're watching?
Well, there's a couple that I'm following as basically drill specs, really. One of them is a company called Colorado. Really good technical management. Right now, they've actually come up a little bit. They seem to be getting a bit of attention all of a sudden, but when I started talking about them, their market cap was about 7 and their bank account was about 9.5. They've got a project right next to Red Chris. Red Chris is a large copper gold deposit that's being put in production by Imperial Metals. A very interesting looking geophysical target. Looks very much like the Red Chris target originally. It's a drill spec because it's a buried target. But the program they're talking about is about $1 million. So, and this guy is very experienced in this area, and he's very excited about the target. But if it doesn't work out, he's still trading for less than his bank account, and he's got other projects, and he's still looking for projects. Another one like that is a company called Mondoro. They actually had a lot of luck initially in China, drilled off a very large gold resource, and then had less luck because basically the Chinese ripped them off, and Chinese state company basically took the project over, but at least they gave them a $20 million door prize on their way out. So they've got about 18 of that still. They've picked up a bunch of projects in Serbia, which I like. Another company that I follow there, Reservoir Minerals, and they and Freeport have made a pretty interesting discovery. And it's early stage stuff, but I like that area. And again, they're trading at 35% below their bank account. So, I mean, essentially the enterprise value is negative. So there's no leverage. You're not paying up for these drill targets, really. And again, their budgets aren't huge. So even after the drilling that they're drilling in Mexico on 2 projects, they'll do some drilling in Serbia. Even after all that, they'll probably still be at about cash value.
And full disclosure, I don't own Colorado, but I do own Mondoro.
Yeah, I own both of them. And I still like, there's a couple more advanced ones. I mean, Silvercrest, I followed them from day one. I really like the management. They're great guys. They did what they said they would do. They put it in production. It's making money. They're going to come out with a feasibility study to double production by adding underground to the open pit. And there's no doubt in my mind that the feasibility is going to be good. And they'll probably make even more money. And it's just a very, very well-run company. The guys really know what they're doing. It's not super cheap. It's a 270 stock now, but it's a company I'm very comfortable with. That's the kind of one you wait for, gold and silver to get whacked. And that's the kind of thing you pick up on days like that. And there's other straight-up drill plays. Gold Quest. They went up to $2 on unbelievably good drill holes. Came back to 60 cents. But they were drilling this blind, and again, it's a blind target, big, huge IP anomaly. They pulled amazing holes, but they couldn't really differentiate the good stuff from maybe the not so good stuff. They were kind of grid drilling it. They started with some new IP about 2 months ago. It looks like that stuff discriminates it. They put out sections showing these new IP anomalies in relation to drill holes, and it looks like this new IP is definitely spotting this stuff. The only way you really know, though, is to go to a line where they haven't drilled it yet, where they've got the anomaly, drill that, and they should be probably starting to do that right about now. And I think, they've got almost 20 million bucks. They probably have 1 million, 2 million ounces at the end of the day on this thing already. If they actually can show that yes, this deeper IP, it does work, it does target, we're not going to be wasting a bunch of drill holes willy-nilly. I think they get their mojo back. And there's a company next door to them, and big giant caveat, I'm a really big shareholder in this company and helped put it together, so this is not a recommendation, but as it happens, the company that's next door to them is one called Precipitate that is near and dear to me and my late brother, and you.
And myself as well, I'm a large shareholder.
So that one wasn't a recommendation, but we're just putting it out there. That's just a name.
Yes. And I do own Gold Quest as well.
Yeah, so do I.
Well, thank you very much, Eric, for being with us.
Thank you, Scott.
Again, that's Eric Coffin, Hard Rock analyst. My name is Scott Gibson with Beneath the Surface. Thanks for being with us.